interest rates being low. What does that mean, first of all?
Okay, so mortgage interest rates being low.
I know that interest rates being low are often misunderstood. And today I just want to break down exactly what that means and is it a good time for you personally. So with that being said, Ms. Sharonda, what do you think about that topic regarding interest rates being low? What does that mean, first of all?
Okay, so mortgage interest rates being low means that it will cost you less interest over the life of the loan to borrow money. That's simply what it means. So for example, at a particular interest rate, if you compare two interest rates, the interest for one interest rate may be $100 per month more in the interest that you pay the bank versus the other. So that means if you're able to get in at a lower interest rate due to good credit and, higher down payment or other circumstances, now is a good time to buy because it'll cost you less money over time. And that is what customers are looking for.
If customers are ready, right? So I want to touch on that too, like knowing that we're ready, like not being influenced just because interest rates are low or they're the lowest they've been and they say like 400 or 500 years, but there are other factors that are going to go into your readiness. And even if the interest rates are low, it still just may not be a good time for you. So what are some determinant factors that you would have people to just check mark off of a list to say, hey, this is a good time for me to take advantage of low interest rates?
Okay, so these are things that I tell customers to consider based on their own personal circumstances. What do you have on your financial plate right now? What debts do you have right now? Do you have car loans? Do you have multiple credit cards? Do you have student loans? How much money do you have in savings to go towards buying a house? Okay, because not everyone qualifies for a down payment assistance program, or for the down payment assistance program, they can only buy a certain price at a certain price point. For example, I think here in Atlanta for down payment assistance, some require you to cap out at $250. Otherwise, you have to come with your own down payment.
Right.
Okay? So those are things to take into consideration. Also, are you buying based on one household income or both you and your spouse's household income? And if that will be wise, so that's something to take into consideration as well. Look at your whole situation because you may not be ready, or you may need about 6 months to a year to get to where you want to be.
With the low interest rates, if somebody was ready, would you suggest for them to go ahead and make the move now? Or under what circumstances should they wait?
I would say go ahead or at least get pre-approved. And the pre-approval is the bank doing an assessment over your income and your debts to see how much you can qualify for based on where you are right now.
Okay.
So I would say at least get pre-approved. Getting pre-approved doesn't require you to buy a house. It just lets you know where you stand and how much you could qualify for.
And that is step one in the home buying process, guys. It's getting pre-approved, talking to a lender, because often we're looking at properties that we cannot qualify for, or we don't know the overview. And I'd say this often, that you might be on the Zillow or the mortgage calculators, but the mortgage calculators are giving you an overview, and it's basic. So they're not looking at your specific situation, your detailed credit report. They're not putting in that missing student loan, payment. So you definitely want to actually talk to someone that has the approval process down pat and can tell you exactly where you need to improve before moving forward, or if you are ready to go ahead and move forward.
Yes. One of the main questions that I ask customers that are ready is, what is the monthly payment budget that you're trying to stay around. Okay. For example, I had a person, a home buyer that wanted to buy in the 300 range, but they wanted to keep their payment about 13 or 1400, and they're first time home buyers, so they didn't want to do a large down payment. They wanted to do the minimum, actually. So that is also what I do as a mortgage consultant. I help set realistic expectations and let you know, based on what you want to pay per month, this is the budget that you're trying to stay around. Or if customers say, well, no, houses that I like are in this range, how much will the payments be and what will I need to do? That is also what I do as well. So that's why it's also important to get pre-approved, so you can know, what you need to shop for, or what you need to do to get prepared to shop for that range.
Exactly. And I do have clients, they'll ask the lenders, like, how much of a house, the number versus let's talk about your payment. You know what I mean? And often that's all they get on a piece of paper is, you can qualify for 300, you can qualify for 400. And I actually have had this happen. I'm going out with these clients, showing them the houses that they want to see in that price point. And then they look at the mortgage payment and they're like, okay, this kind of mortgage. And we got to go back to the drawing board. So now that's one of my foundational questions once they're approved is, okay, I see that you're approved for this amount. What type of mortgage do you want to pay? And being realistic, because right now I have a lot of clients, they're like $1,000. Well, what are we going to get?
Right. Especially in Atlanta. Come on.
I've actually had to put a few clients like, this is just not a good time for you because there's no houses, and then you can't go over a certain amount, and there's like 5 houses in this price point for you. So we're just going to take a little break right now.
And then some customers will, I tell them the interest rates are going to be what it's going to be. Okay. So your readiness is going to be the determining factor. Now with the interest rates being good, it's a good incentive to go ahead and buy. However, make sure that you're ready for the range that you want to be in. Some customers have had to make certain compromises. They may want to stay in a certain area where, based on the price point that they qualify for, they may have to stay maybe 2 to 5 miles away, from their desired area. And I think as a realtor, Shana, you can attest to that, that the customers kind of had to open up their budget or open up their
location. Actually, one of the other foundational things that I say is get approved, and then we'll pick location based upon your approval amount.
Yes.
Don't come to telling me you want to live in Alpharetta and you want to pay $1,000, but you want a 5-bedroom, 4-bath home. Unless you have $200,000 to $300,000 in cash in your bank account, that's not going to happen. So it is so important to, 1, get approved, 2, let's determine the location after you're approved. And then 3, we go out and house hunt and find a house and move forward and all that stuff. But
another thing that I wanted to say about interest rates is the lowest interest rates will be based on the shortest loan term. So take into the consideration of that, the loan term that you choose. You can choose a 10, 15, 20, or 30-year mortgage. But generally, the higher interest rates are on the 30-year mortgages, and the lower interest rates tend to be on the 10 or 15-year mortgage. But the payments on the shorter loan terms will be higher. Okay. And the payments on the 30-year mortgage, because you're paying over a longer term, will be lower and may be more so in the budget. So take that into consideration too with the interest rates.
That's good to know. And I don't think many people even know that that is an option, the 10, 15, 25, or whatever. I think that we automatically have just been conditioned to 30-year mortgage, and we just go with it. What about those that may want to refinance if they're already homeowners?
Definitely, I would say now would be a good time, especially if you've been in your house for at least 5 to 7 years. See about refinancing. And when you refinance, it doesn't mean that you start over on your mortgage. So like if you started off, if you bought a house 5 years ago on a 30-year mortgage, you can refinance on a 10 or 15-year mortgage. You know, if this is your forever home and you know you're going to be here for a while and your desire is to actually pay off your mortgage, you can say, hey, instead of doing a 30-year refinance, how would the numbers look if I did maybe 15 or maybe 20? You know, I want to see. I have a lot of savvy customers that they wouldn't mind making the same payment that they make now if it cuts off the number of years that they have to pay
and
on
that
their
makes
loan.
sense.
Mm-hmm.
That makes a lot of sense to do that.
Yeah, because I locked a customer in the high twos and another customer in the low twos. So it's looking really, really good, really, really good. So I would encourage anyone that has an interest rate of like 4% and up, definitely you should be refinancing right now.
Gotcha. If and a question that I get, I know interest rates change daily. So just because it's something today, every day the interest rates change. What does that change based off?
It's based on the market. It's based on what's going on in the economy. It's based on what's going on in the banking system. You know, there are a lot of different variables. You know, even with the election, there's so many things that impact the interest rates. So I would say just get in where you fit in.
Right.
And be strategic.
And as people are looking online and they're seeing interest rates or they're talking to lenders and the lenders are telling them what the interest rate is today, I talk to people sometimes and they're like, well, I want to get my credit score is at a 650, but I really want it to be at an 800. Does that, I know that credit plays a part in your interest rate, but is there a difference after, like if I have between a 650 and a 750, you know, is there an interest? The higher my credit score, the better my rate. Are there brackets? Like
okay, so this is what impacts the interest rates. Your credit score, the loan amount you're requesting in comparison to the sales price or the value, whether you're refinancing or purchasing, the property type, because interest rates for condominiums are a little bit higher than interest rates for single family homes. The areas, all of that impacts your interest rate. So credit scores are not the only thing that can impact your interest rate. How much your down payment is, because you get a better you get a better interest rate if you're putting 10 or 20% down versus 3 or 5% down or using down payment assistance. A lot of people don't know that.
Right.
A lot of people don't, you know, you get down payment assistance, but sometimes there's an add-on to your interest rate for that.
Right. Right.
So
got to educate them that if they cannot do down payment assistance, it's the way to go. Like, because you're paying more at the end of the day for it. If you absolutely need it, okay. But then you have to question, am I in a position to really be buying a house?
That is true. That is very true.
If I need people to give me the money to buy, you know, because you got to think about it. It's still like a loan, you know what I mean? Like you're borrowing, but you're paying the cost for that borrowing.
Yes.
Which could save you more money over time.
And as a mortgage professional, I can honestly say that those that seem to be most invested are the ones that are investing their own money into the process.
Right.
You know, so they tend to be more aware or more conscious of what it takes to get into a home as well as maintain it. Because getting into a house is one thing. Maintaining it is another. You may have a low interest rate and all that's well and good. You got your payment in where you want to be, then boom, they're building a Smoothie King and a Starbucks down like a mile away from your house. And then the property taxes go up. So even though you have a low interest rate, your payment goes up because the value of your home may have increased, which
is a good and bad, good because your value is up, but your payments are up. So
yeah, so that's something to take into consideration too, not just with the interest rate, but also look at the areas. Are the areas like, the economic development, how is that going? Because we want houses that increase in value,
yeah,
but there's the costs that come with that too.
Awesome. Well, I think that answered my question basically for the people that wanted to know about interest rates and what they were and if it was a good time to buy and all that great stuff. It's still personal. Each person is on a different level, I guess, and you would have to consult with a mortgage professional to determine that, and knowing your overall health, financial health and well-being, if you're even ready or prepared to become a homeowner. So those are things to take into consideration during this time. So I hope that helped you. And if you are interested in talking more to either one of us, our information will be below in the link. I'm Shana Rivers, part of the Atlanta Home Experts team. Sharonda Everson, our mortgage professional, and we will talk to you soon. Bye.
Bye.